Good afternoon, Fabian Onetti with the Musings of Winston. And as you say on the title, we're going to talk about inflation anxiety versus the NASDAQ. But first, the S&P did 1.1% last week, the Dow 0.9, and the NASDAQ 2.06. And let's remember, the NASDAQ has finally looks like woke up after reporting spectacular earnings for Q1, didn't raise a lot. So in a way, the multiple has contracted. So we like it. Remember, we are big fans and we think we should be there. So it's catching up and we like that. In the meantime, some other, before we go into this inflation anxiety, some quick news. The big thing probably for the week was the spank that Exxon, Shell, and the other oil companies got. Exxon, with a hedge fund that owns less than 1% of the company, I think owns 0.02%, but they got the vote of big names like CalPERS and BlackRock and other pension funds, and basically are forcing Exxon to present a strategy. They got two directors on the board, and they're forcing basically Exxon to present a strategy to divest from a lot of energy and to cut their emissions. Likewise, it happens to Shell in the Netherlands, with the judge order the company to severely cut emissions by 2030. So clearly, the oil energy companies to us are now sort of the new tobacco. They are being vilified for what they do, etc. But if you were investors in the middle of that, you make good money because they were very cheap, so you had a protection on the downside. They usually would pay good dividends, and they still managed to go up a little, or in some cases a lot. So careful with the fashions and the fads, because these companies still do it, and we still, as much as we like a clean world, which we do, we still need energy. So it's not going to be solved right away or by someone forcing the hand of others. The market is still with this big anxiety about inflation. You have a lot of reports. Cover of Barron today was speaking about exactly that, the supply chain issues, things are not getting here. But despite that everybody's talking about a 2% 10-year bond, the bond is at 160. It rallied over the last week, thinking and basically siding with Mr. Powell that said, listen, this is very temporary. We have supply issues, pandemic, etc., etc. People are spending more in the house, in construction, because they didn't spend that money on vacations, on other things, and we have supply issues. Once the world gets back to normal, this is going to be temporary. And when you look into basically the lines of that very lengthy Barron's article, you couldn't agree with Powell more. That, listen, this is temporary. Don't make big conclusions on that. So that's there. But the other fear of the inflation, guys, is the budget and infrastructure plan that President Biden presented to Congress on Friday. $6 trillion and counting. And as they say, they threw everything at the kitchen sink, and then we'll see what passes and what sticks. And I think that even before thinking what the Republicans will say, which most likely they will say no, is think what the Democrats will say, because some conservative Democrats are not very happy with this plethora of spending, this cornucopia of benefits for everybody. So the market cannot yawn and ignore it, rightfully so, because we will have to see a lot of stuff before we see what's finally going to happen there. So don't rush it, don't get desperate, we'll see. Very quickly, just overnight, as you know, the renminbi has been appreciating significantly, and the Central Bank of China increased the reserve requirements. What's going on here? Yeah, increase the reserve requirements to avoid some, appreciation there. We'll see what happens in the opening. Remember, there were no markets today, Monday, in the United States. And finally, for this week, we will have the so much. What's going on here? 1 second. I don't know, something is wrong with my system. Sorry, it looks like. It's going well. Okay. Sorry. We'll have the much anticipated labor report. Remember, last week we have this big bad surprise. We're expecting 1 million, came at 266,000. Now We are expecting 700,000. And the most important, that review of the previous month to see if that number was a fluke or something more serious, which again goes in favor of Mr. Powell. This says we need to wait and see. The economy is growing, but it's uneven. Not everybody is being benefited. So we'll have to wait. That's all we have. Have a great week. You can always connect us every day live in our Zoom interactive call at 8:30 New York time. Have a great week.